morning. It's Tuesday, which means that business well before work, right? Is what we're going to call this here. Is it's 7 a.m. here at Robat TV. McCollum on business. Well, we get you looking at the business world before it wakes up and gets rolling. Markets open at 7:30. So we'll talk a little pre-market stuff here, obviously, this morning. And I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world this morning. We do the 7 a.m. show here on Tuesdays. We do 11 o'clock rest of the week. We're just trying it out here in the morning. Success so far, so we appreciate everybody joining us live. And, of course, on demand here at Robat TV or on the YouTube page for our production side of people, of what we do here, I should say, at Robat TV. With all that being said, let's get into that Market Watch. So a lot has happened overnight, and, you see here just the standard market stuff here. I'll tell you what the futures are right now as the market's getting ready to open here around 7:30, as I said, Phoenix time, which is where we broadcast here. But the Dow futures right now are actually down 28 points to 49,495. The S&P futures are up 13, 7,016 is where that's trading at. The NASDAQ futures are up 120 points to 25,970. And then the big question is, right, where's Bitcoin at? Well, it's still in that 78,000 range, as you see. Russell 2K futures as well. Well, it's in that 10-point range on your screen. And then, Bitcoin dropped down below 80,000 yesterday and still there right now, 78,303 for Bitcoin here this morning. So Bitcoin is, just hovering at that level. Gold and silver, well, it's kind of recovered. About 37% down for silver over the last two trading days, Friday and Monday. And then, of course, gold down about 13% on that. It is recovering here overnight and this morning here in what it is doing out there. So the spot gold is up 5% here this morning as I see it. Spot silver's up 9% as well here early on this Tuesday morning. So obviously down Friday, down Monday, up, as I said, 5% on gold, 9% on silver here today. So we're seeing a little bit of a recovery here on those two precious metals that are, of course, trading at high record levels, even with that big drop over the last couple of days. Stocks we're paying attention to here in pre-market. First stock we're going to look at is Palantir. This stock has jumped immensely here. As you see, yesterday it closed at 0.80% up. And then you see the pre-market stuff here on the right of your screen. It's up 11% right now, Palantir is. They basically did their announcement of the quarterly numbers yesterday, and their fourth quarter earnings were a win for the company over expectations. Palantir reported adjusted earnings of 25 cents per share. The expectation was only 23 cents per share. Revenue was $1.41 billion, while the expectation was $1.33 billion. So big discovery, big win here for Palantir, up 11% here in pre-market trading here this morning on Tuesday. Now let's do a follow-up here. We talked about this yesterday as well with Disney was way down. Let's look at Disney again here this morning. Yesterday, you see there, it finished 7.40% down yesterday. If you look on the far right there, if you're watching us, you'll see a little blip up there as well on where it is at. It is up here in pre-market trading. And all that's happened, they reported their numbers that were an earnings beat for the fourth quarter, but a lot of stress on the company of Disney, including Bob Iger, their CEO, that stepped away, had to come back, stepping away again here. Well, they named their new CEO, Josh D'Amaro. He's chairman of the Disney Experiences portion of the company, that he's going to be the next CEO, succeeding Bob Iger. And the stock this morning is up based off of that news for Disney as well. So, and he's generally got a positive vibe. They've been looking for Bob Iger's successor. They messed up last time with it, and Disney kind of struggled. So they've been looking for years here who's going to succeed by Bob Iger this time. So maybe they got it right. Well, investors tend to think so with it being up here early on Tuesday. And then let's look at PepsiCo is our next stock we're going to look at. There is a story coming up here shortly on this here in our first segment. They finished yesterday up 1.02%. And then they are up here. I'm sorry, they are up here barely, or they have switched to the negative in the futures. Actually, it looks like right now in terms of the pre-market trading. So they reported fourth quarter earnings and revenue, and it actually did beat at analyst expectations. PepsiCo did, but sales are actually down. United States market is hurting this market a lot as well. Volumes are declining here, specifically in the North America segment, which of course is PepsiCo's home base as well out there. So shares are down right now. They were up earlier in pre-market, down right now. So we'll have to see what PepsiCo does throughout the day. We do have a story on their reporting as well coming up here in just a few minutes out there. Later on, when we come back, we're going to look at some medical stocks out there. Pfizer and Merck are two we're going to take a look at, and then we're going to look at PayPal as well, as they are in the news today, and the pre-market trading for them is also out there and showing us things to pay attention to here today as the market opens coming up here at 7:30. But first, I told you yesterday that the Bureau of Labor Statistics came out and they said the January jobs report, that was scheduled to be released on Friday. I told you yesterday it's being delayed. Well, how delayed? We don't know. We're back into that situation where the partial government shutdown that's happening right now is affecting these reports out there, which again affects how the Fed looks at the economy for their next Fed meeting as well. If you don't know, during these partial shutdowns, federal agencies do furlough non essential workers, which is happening again. It happened in the big shutdown at the end of last year as well. So basically, the people being furloughed right now are the workers that are tasked with gathering data and compiling economic reports, like the jobs report that's supposed to be out on Friday. So, what's the update on the partial shutdown? Well, the House of Representatives is starting the process to consider the Senate's compromise bill to fund the government. Now, the House is going to do that. Looked at it yesterday afternoon to see if they can advance it down there, right? It had to go through the Rules Committee. That's the gatekeeping side for most legislation that heads to the House floor. They have to approve it and send it down as well. And then Speaker Mike Johnson, he did tell Fox News over yesterday, Monday afternoon, that he was optimistic the shutdown could end by sometime today. Today is the earliest that the House chamber can look to bring that bill up to passage from that side. So, in terms of an update on that early this morning, we don't have an update on it. We're just kind of sitting here waiting as I'm looking at my screen here to see. We're just kind of sitting here waiting to see what the House is going to do with that bill to end, hopefully, this partial shutdown. It's affecting a lot of people out there. Now, TSA's funded. Other government agencies are funded after the last time, but we do have these partial ones, like these data reporting, still down. And another update for you here early on Tuesday, as I told you last week, SpaceX was looking, they have a big IPO coming up this year, and they were looking to merge with another one of Elon Musk companies out there. Say that 10 times fast. Well, SpaceX officially announced yesterday that it had brought XAI is what SpaceX has done now. It's an effort to help the world's, basically Elon Musk dominate the rocket and artificial intelligence businesses. We talked about this last week with all the companies. Tesla was looking to be part of that merger. And to me, it just made sense that the artificial intelligence wing of Elon Musk merged with the SpaceX wing as well. This deal is going to combine several of Elon Musk's offerings in terms of his companies. So obviously, their chatbot, the Grok, is going to be part of this, as that's part of the XAI side of it. The satellite company Starlink, part of SpaceX, is now going to be merged as well. And don't forget, X is part of the XAI company as well. They merged and were purchased a year or so ago, a year or two ago as well. So all these companies all being pushed together. Why is this such a big deal, and why did I think these two companies were going to merge specifically? Well, it's because Elon Musk and a couple other artificial intelligence companies, not all of them, Microsoft's kind of a dissenter on this, but they all want to speed up the development of technology to allow data centers to operate in space. That's the end game here with these companies. Elon Musk does believe, and he talks about it a lot, that these data centers in space will help overcome the problem of huge costs in electricity and, of course, water and all the resources needed in building and running AI systems here on Earth. Right? Talk to anybody in Mesa, Phoenix, or the West Valley, and we all know our expenditures because of those large buildings. Musk did say in the announcement he does estimate that within 2 to 3 years, the lowest cost way to generate AI compute will be in space. That's a quick turnaround here in 2 to 3 years. Obviously, SpaceX and Google, they're big competitors. They are working on a research project called Project Suncatcher, meaning Google. It's going to equip solar powered satellites with AI computer chips and a prototype that could launch as soon as next year to kind of test that out at that time. But SpaceX and Google are all full in on this space race for the data centers in space. As I said, Microsoft not in on that plan at all, and most other ones are not in on that plan. But so this combination is a follow up. SpaceX and now, of course, teaming up with XAI as two companies out there. And SpaceX is headed to that huge IPO. This is obviously going to generate more money here for the IPO of SpaceX coming up later this year as well. And right, we looked at PepsiCo's stock here to begin the show. Stock we're paying attention to. Well, they came out this morning and they reported quarterly earnings and revenue that has topped analyst expectations. So it sounds like good news for PepsiCo, right? Well, there's some negative to the backside of this reporting as well. They beat expectations because they were fueled by improving organic sales, as they call it, across the business. So demand for the company's snacks, as we know, we've notated here, they've shrunk the size of their snacks. The Frito-Lay brand, for instance, they shrunk the size of them and raised prices a lot, even before inflation really started taking hold in this country. They started doing it as well, but consumers have been not happy about that and haven't been buying the products there as well with those higher prices coming in from those PepsiCo products. So this year, though, Pepsi has announced they plan to lower prices on products, specifically chips and Frito-Lay brand of things from that North American food division. They want to improve competitiveness, is what they said, and they want to purchase frequency of their brands is what the whole idea here is in lowering pricing. Productivity savings will offset the lower prices, is what Pepsi is saying at this point. They're not going to give you more chips again. They're going to keep the chips shrunken down into their sizes and the products shrunken down in their sizes, but they're going to lower the prices now. Well, so take your win where you can, right? Earnings per share they reported of $2.26. Well, the expectation was $2.24. The revenue came in at $29.34 billion. Well, the expectation was $28.97 billion. So they did beat the numbers expected of them out there. The net sales even rose 5.6%. It went up to $29.34 billion in net sales as well. So if you don't know what organic revenue is, well, that's revenue that strips out foreign currencies, acquisitions, and even divestitures. So what is the organic number? Well, it increased 2.1% in the quarter that they reported on as well. PepsiCo is seeing volume declines, mainly and particularly in its North American business out there. We've kind of given up on the Pepsi brands and everything with their price hikes and whatnot. The metric excludes pricing and foreign exchange fluctuations because it basically reflects demand more accurately is where we get those numbers. So if you want to look at global volume for its food, well, it fell 2% in the quarter. That's globally. But the volume for its drinks actually went up about 1%. Don't forget they own Gatorade, obviously the Pepsi product lines, Gatorade, and a bunch of Poppy, Starry, companies that they own. So if you want to look at just North American numbers, PepsiCo Beverages North America, it includes, like I said, Gatorade. Poppy is part of them. Yes, it is. It saw volume shrink 4%. So globally, a 1% increase in beverages. But here in the United States, down 4% for PepsiCo North America. Yeesh, that's a big difference. PepsiCo North American Food Division, that's Quaker Oats, Cheetos, the Frito-Lay. Well, they reported volumes fell 1% here in the Americas as well. So PepsiCo's hoping they can streamline costs and lower prices. PepsiCo, we've talked about PepsiCo so many times here on this show. of how their products are shrinking and their prices are going up. And it started, like I said, before inflation really started taking hold. They started doing it. Like McDonald's, they started the price increases before inflation kind of took over and everything. And the people noticed, just like McDonald's, where they're struggling as well. Their sales are down. People aren't going to them as much. People notice it and stop buying their products, stop buying all that. And so PepsiCo's finally trying to right that ship now moving forward. And then another follow up for you here this morning. And this one's about what's happening today here on Capitol Hill. Netflix co chief executive officer. Well, he's going to go in front of the U.S. Senate today. His name's Ted Sarandos, by the way. And he's going to go in front of the U.S. Senate at a hearing over how Netflix's proposed $82.7 billion acquisition of Warner Brothers Discovery. Well, you want to talk about how it's going to affect competition in the streaming entertainment industry specifically. Don't forget, Warner Brothers has HBO Max. So the number one streaming service, Netflix, is trying to buy the number three streaming service, HBO Max, out there. The a lot of question marks here on the senators here as he goes to the Senate in terms of the competition and regulatory side of things. U.S. Senator Mike Lee, well, he's going to lead the hearing. And by the way, Bruce Campbell, Warner Brothers Chief Strategy Officer, he's expected to testify in this as well. The Senate, just so you know, they cannot prohibit the deal themselves. It goes through the regulatory process and everything. But this hearing is going to allow lawmakers to demand details from Netflix on how that transaction and buying of this company would affect consumers. Not just consumers, but workers and even competitors out there. I believe if these companies are allowed to merge, it's worse for consumers. It's worse for theaters. You know, Warner Brothers, they'll want everything to go streaming. Worse for workers. Netflix does not pay the same as movies do out there. Whether you think that's good or bad, they have a different pay structure out there. They don't do ratings, they don't do revenue, etc., because they don't have it other than their streaming service out there. So there's a lot going into this as well. But number one and buying number three, it's going to make them a large number one and hurt the competition out there, no doubt about it. Right now, the U.S. Department of Justice is reviewing the transaction. So they're not only reviewing the transaction between Netflix and Warner Brothers Discovery, but they're also looking at that hostile bid, right, as we'll call it, from Paramount Skydance that's still out there. So, U.S. Department of Justice, well, it's going to see. I think this is going to be a tough sell on the regulatory side, to be honest with you. Though I saw even there was even questions from some of the senators leading up to this hearing today. Some of the senators are saying Netflix doesn't even want to buy Warner Brothers. They just want to hurt Warner Brothers by holding them up for the next year with all these regulatory processes and everything. They want to kind of stifle their business down to hurt them enough that they're not going to be a competitor for Netflix moving forward when they know they're probably not going to be buying them here coming up. So that was an interesting, I'll call it a theory here that I was reading about from some of the senators going into this meeting today with them. So something to pay attention to if you like free enterprise out there and choices in your movies and TV shows and how you watch stuff out there. And finally, here in this segment, I'm going to leave you with this. It's breakfast time, and there's a limited offering coming from McDonald's, mainly for Valentine's Day here. But yeah, I don't know about this. McDonald's is coming out with a McNugget caviar kit, folks. Yes, it's going to be exclusively online this month. Here's the best part. It's going to be free as well if you can get your hands on one. This McNugget and caviar combo, where do you think of this, right? Well, it's inspired by the dish served at the U.S. Open in last August when that happened, the tennis tournament. That was a very viral dish, hit all of the markets out there, all of the TikToks and everything. And it's very viral and looks disgusting in my eyes. Yeah. So it is a New York-based Korean-inspired fried chicken restaurant. I don't even know how to say this. COQODAQ. I'm sure you're supposed to pronounce that somehow. Well, they sold 6 chicken nuggets topped with Petrosian caviar at the U.S. Open. Cream Firachi. You can tell I don't eat this type of stuff. And chives as what was sold there. And it was sold at the U.S. Open, the tennis championships, for $100. So McDonald's, Kind of inspired by that. They're offering their caviar kit, though, for free. Maybe McDonald's knows their audience different from the U.S. Open audience out there. So all you have to do is sign up for a kit when they actually drop online if you're interested. McDonald's McNugget caviar kits, they'll be available exclusively at, ready for this? McNuggetCaviar.com. They even created a webpage for it. It's going to be today, this morning, next Tuesday. Today's not the 10th. Next Tuesday, 11 a.m. Eastern Time, 9 a.m. our time. You can sign up for this at McNuggetCaviar.com. Kits are available while supplies last. Like I said, mainly for Valentine's Day here, but make no mistake about it. This is a test here on if they need to start selling this type of an item. So what it'll include a 1-ounce tin of McNugget caviar, a $25 McDonald's gift card, the cream friacci, if I'm saying that properly, but also it's going to have a mother of pearl caviar spoon for you out there, folks. Because Lord knows you can't eat caviar without a caviar spoon. Gotta look all fancy while you eat it. There you go, folks. Sign up if you want. Next Tuesday, put it in your calendars. Tuesday, 9 a.m. for you. It's all going to be there. When we come back here at McCollum on Business, we keep this Tuesday morning show rolling. Of course, 7 a.m. here live. Appreciate it. We see you guys online here. Appreciate you joining us. If you miss us, of course, live, you can catch us on demand here at Robat TV. We'll talk a little bit more about that when we come back. Another market watch as the market's getting ready to open at 7:30. Get you ready on pre-markets out there with the futures and some more stocks we're looking at. Of course, local stories coming your way. Come on back, McCollum on Business. We're back here, McCollum on Business. Of course, Tuesday edition, 7 a.m. here on Tuesdays. Trying out a morning of business show right now. And folks, it's been amazing your support here of the morning program. We see the live numbers. They actually, quite frankly, are bigger than the 11 a.m. numbers. And of course, on demand also up there as well. Don't forget, though, you can also find this show here at the YouTube page where that we use here. Our production company that does stuff here at Robat TV has a separate YouTube page for on-demand things. All of our shows we produce are on that YouTube page as well, on demand for you. But we appreciate you joining us here. Of course, as soon as we're done here, we roll right into the main event here at 8 o'clock. Me and 17-year NFL veteran Del Hellestrade get you up on the sports world, 8 to 10 a.m. today and every day of the week. Bruce Cooper is going to join us today as well. Of course, Channel 12 sports reporter for 34 years. Comes in for the 9 o'clock hour as well, where we talk local sports. So join us on that. If you miss it, of course, on demand, Robat TV on the YouTube page as well. There is a free podcast as well on your favorite podcasting system. At TME Sports Show is where you find that. The pit stop, rolling back out probably next week. Now, we're going to start that this week. Then the Clash got delayed with all that snow. The Clash is going to run on Wednesday as of now. Looks like it's going to go on Wednesday. Tomorrow, the Clash is going to go, so we'll have the pit stop back for you We might do a show end of this week. It all just depends on the Clash and what we could set up for this season. We're just a couple weeks away from the Daytona 500. But the pit stop back. So follow us at the Pit Stop Talk on social medias. Of course, follow us also here at Robat TV, the YouTube channel. And there is a free podcast for the pit stop as well at the Pit Stop Talk on your favorite social media platform. It pops right up for you there. Follow us on any of those platforms. We'd appreciate it very much. And of course, you can catch it here on demand, Robat TV, and the YouTube page out there. The Real Matrix is Fridays at 10 a.m. here at Robat TV. New episode comes out. And then after that, well, the podcast version comes out at noon on Fridays. We're kind of having to redo kind of the YouTube policies on that due to some copyright things, et cetera, that show uses. We're working on that. That'll be up and fixed here shortly, so stay tuned for that. But now, catch it here at Robat TV or listen to the free podcast. The Angry Patriot, well, he just wants you to come with an open mind and make your own decisions to what he wants to present to you out there. And of course, as soon as we're done here, we get this on demand as well. And let's not delay it anymore. Let's get to that by going to the Market Watch. Market opens here at 7:30, so we're 3 minutes away. And right now, Dow futures are down 77 points. On your screen there, you see them. It kind of lags a little bit in pre-market trading here. The S&P futures are up 7 points, as you can see on your screen right now. The NASDAQ, 91 points up in the NASDAQ futures. You can see Russell 2K is up that 6 points right now as well. So overall, the market's going to open on the up. Maybe the Dow is the only beneficiary there. And now you see Bitcoin is right. It's down another, as of now, 326 points. But more importantly, it's trading at that low number for it, 78,331 for Bitcoin here, as the market is about to open up, as we are looking at this morning. As I said earlier, gold and silver trade is recovering today. It's not recovering in the huge amounts that it dropped over the last couple of days, but it is up 5% and 9%, 5% for gold, 9% for silver here in pre-market trading as we get into the market opening. So we'll see what gold and silver do as they continue to come back here on the market today. Stocks that we're paying attention to right now, well, a couple pharmaceutical stocks. First one's going to be Pfizer that we're looking at here in pre-market trading. It finished yesterday 0.83% up, Pfizer did. And you see there the gray on your right is the pre-market trading, and it's down about 1% right now on the market. Pfizer reaffirmed a modest outlook. They did the reaffirming there of that outlook, well, it overshadows the fact that they beat quarterly earnings and revenue. Well, they also said their experimental obesity drug, which is a drug that they acquired through a company called Metsera, well, it drove a solid weight loss when taken once a month in a mid-stage trial. That's why it's kind of come back a little bit to 1% down here today in pre-market trading. It was down more than that earlier in the morning. Patients with obesity or who are overweight lost up to 12.3% of their weight compared to with placebo at week 28 on the ongoing phase 2 study. The injections weight loss was actually up 10.5% while analyzing all patients regardless of discontinuations out there. So their pill that they got from a company called Melsera that they purchased is a bigger percentage of weight loss here in this phase 2 trial. So Pfizer right now down about 1% here in pre-market trading, is recovering a little bit off of that news that broke this morning. Next up, we're going to look at Merck here, right? Another pharma company, another giant pharma company. Finished yesterday 2.81% up for it. And it's down about 1% here in pre-market trading also. They issued a modest 2026 outlook again. You're noticing the trending of words here with these two companies, right, in the pharma industry. The company is going to lose some drug patient protections here in 2026, which means they're going to face more competition from generic versions of their drugs when they lose those patent protections here coming up. The company expects revenue to range from $65.5 and $67 billion for the year. Analysts were expecting $67.6 billion. So they've revised an already modest outlook underneath the expectation level. That's why in pre-market here, they're down about 1%. And then finally, we're going to look at PayPal out there. Obviously, the financial company, and you see yesterday they closed 0.68% down, and then you see the large cavernous drop there. 17% down right now in pre-market trading for PayPal. It's going to be interesting to see what they open at and what they do today out there. They issued a very bad profit forecast for 2026. They even reported fourth quarter earnings below the expectations early this morning as well. I guess some good news, maybe not. Maybe this is leading to this 70% fall here in pre-market trading, but they named a new president and CEO as well. They're taking HP's, Hewlett Packard's, Enrique Lores here. He's going to be the new president and CEO of PayPal, who's had a lot of headwinds and it's kind of performed badly, I guess, in terms of expectations last couple of years with the previous CEO. Maybe Enrique Lores can turn this around a little bit. Well, his first day of being announced on the job, PayPal opening pre-market 17% down here this morning. Now let's get into some local stories out there. And first up, well, we're going to go up north here to Nevada because this is something to pay attention to. It could come here to Arizona as well and everything. Now, a lot of this would probably cover more northern Arizona than us here in Phoenix, but it is interesting that Nevada has now become the first state to allow insurance companies to kind of single out a specific thing on homeowner policies. Yes, that's to exclude wildfire coverage in insurance claim. So right now, if you don't know, you have to have wildfire coverage in your policy, no matter what, right? Which obviously increases your amounts that you pay, even if you don't need it, right? We do not live in an area we have to worry about wildfires, but we still pay for it. So this experiment in Nevada could become a nation's model coming up if it works out. It obviously wants to, this is one solution to kind of stop these skyrocketing insurance costs that are happening right now. Obviously, critics on the other side, well, saying that this could be very bad for homeowners. We'll talk about that here in just a minute. This provision is called a regulatory sandbox, is what they're calling it in Nevada. It allows these insurance carriers to propose omitting specific types of coverage. That would be like wildfire insurance, flood coverage, for instance, if you don't live in a flood area. A regulatory sandbox is a space for live testing of products and services conducted in a controlled and regulated environment. That's why they call it the sandbox. This wildfire insurance carve out, well, it's scheduled to be discussed by the Nevada Division of Insurance later on this week here in Carson City in Las Vegas. I believe you can watch it online. I saw a link as well if you're interested in how this is going to work. Obviously it's being done here because one, you might not need wildfire fire service. You might not want to pay for it even if you live in wildfire country, right? But it's a way to get cheaper insurance, right? But obviously, consumer advocates they're worried that you could be without wildfire insurance without even knowing it. What if your insurance company doesn't even offer it to you and you assume you get it and you don't? They just kick it out of there, right? So you could be in that situation if a fire comes through and you go to claim on it as well. And then also you could say, no, I don't want it to save money. Then you're up the creek without a paddle here when a wildfire does roll through and you have those costs yourselves with no insurance coverage as well. So interesting enough, why are they trying to get insurance cheaper? Well, if you have insurance on anything, you know. And there's a study out there from the Consumer Federation of America. This study on homeowner insurance rates, they called insurance rates overburdened. What they did was they looked into rates from 2021 to 2024, and insurance rates, not a shocker to anybody, increased significantly throughout the whole country here. Here, they found that the insurance rates in this survey increased well above the rate of inflation. As I said, not a surprise if you have insurance. Contributor factors, well, they include costs for labor and building materials. Right, if a house burns down, a hurricane rolls through, it's more expensive today with all the inflation to obviously rebuild that home than it originally was out there. But also, they're blaming the more extreme weather events that have been happening, as the Palisades fire, for instance, taking out all of those homes. That's obviously a costly events out there thing. Who was the state with the most overburdened list here for insurance, meaning the pricing it went up? Utah is number one as well. Their homeowners insurance premiums rose by 59% in Utah over those 4 years they looked at. Well, It seems like the Mountain West states seeing the high increases. You know, Arizona, we know we're getting high increases. We were third on that overburden list. Yeah, we were number three. Yeah, 48% increase over 4 years in our homeowners insurance, folks, here in Arizona. We have no big weather. We have no like occasional rainstorm, right? But we have no hurricanes, no bad weather in terms of those big weather events out there. We don't have very many wildfires, although Northern Arizona gets them, occasionally and everything. And we're at 48% here on homeowners insurance. Yeah. Colorado, by the way, another Western state, 16th on the list, 27% increase for them out there. Yeah. So what's the excuse? Obviously, it's pricing here is what they're going to lean back on, right? The cost to repair stuff and fix it are through the roof out there. And that's why, I mean, if you follow the main event, I talk about State Farm and roofs and stuff. They're just not playing roof claims right now. They don't care if your roof blows off. They have zero interest in paying for it. And we know why, because we've gotten quotes to fix some roofs that we've had to do, and they're through the roof. They're ridiculously through the roof, and they don't want to pay it. Insurance companies are scams, folks. But I digress here on my personal feelings about them. Arizona Attorney General Chris Mays, well, she wants you to be aware of those cryptocurrency ATM scams that are becoming a rage as well. She's trying to address these schemes because she's seeing lots of filings and complaints about them out there. She is urging Arizonans to report their case if you do get caught up in this within 30 days. And they created a new fraud complaint form out there. So these are those crypto kiosks you're starting to see everywhere out there. So scammers use them because of their their lax user protections. And cryptocurrencies, very hard to trace. They're actually made to be untraceable as much as you can. And so they're obviously people are targeting that to go withdraw your money from those things instead. There's roughly 600 of these ATMs throughout the state of Arizona, according to the Attorney General's office. In 2024, just to give you an idea, Arizona's lost over $170 million in savings. Now, that's the crypto fraud as a whole, not just these ATMs. But if there's 600 ATMs throughout the state, guarantee you people are being affected by this out there. And obviously, the big factor, big concern is the older population here in Arizona as well. Nearly two-thirds of all cases nationwide in terms of crypto frauds includes adults over 60, according to an FBI report out there as well. So these are the physical cryptocurrency ATMs that are coming out that she's talking about. She said if you're being directed to use one, there's a very high chance you're being scammed. Yeah. So what's happening is people are saying, hey, go to this specific ATM and withdraw money and then give it to us. So I want to make that aware for you. Of course, watch for our parents, our grandparents that don't understand cryptocurrencies. But also the younger generation gets hit a lot with this as everybody's trying to get in on cryptocurrency and all of what it brings to the financial markets and things. So just be aware here early on this Tuesday morning. And hey, if you have CenturyLink or Quantum Fiber here in Arizona, well, you're going to be now owned and migrating to a company, a little one called AT&T out there. Yes. Arizona customers that have CenturyLink and Quantum Fiber, well, AT&T is buying those up. So they have AT&T has completed that $5 billion purchase of all of Lumen's mass market fiber internet business. It's not all of it, it's majority of it out there, which does include that CenturyLink and Quantum Fiber. So they say they are going to continue to support CenturyLink customers, and nothing will change there from AT&T. But you will eventually move over to AT&T fibers. They work on that integration here between the two companies as well. AT&T does plan to boost its investment in local fiber infrastructure here in Arizona by 50% just this year alone in 2026. You got Google Fiber, CenturyLink, Quantum Fiber, AT&T Fiber now is coming into here. So fiber networks everywhere out there for you folks. Choose wisely. And Mesa is getting a very another large company. As I say that kind of weird. Yes, this is an advanced manufacturing company. It builds factories powered by artificial intelligence. Well, they're opening a very large, a 290,000 square foot facility over in Mesa. Mesa's got a lot of wins on this stuff lately. Hadrian is the company name, if I'm saying it properly. Well, they're a California based defense and aerospace manufacturer. They put $200 million into this facility. They're calling it Factory 3. If you drive by there and see that, you'll see it sitting there. It's going to have autonomous production workflows, high tech manufacturing systems, even a deep integration of robotics and AI to accelerate productivity out there. Now, this is all from a City of Mesa announcement that I got yesterday in my email out there. So, Adrian coming out here to the Mesa side and 350 jobs because a lot of these AIs and data centers, they don't bring large amounts of jobs here. It's all automated work, etc. But this Factory 3 will bring 350 jobs to the valley, according to the Greater Phoenix Economic Council as well. So, more aerospace, more defense contractors here coming to the valley from California, of all places. And finally, just a last update for you here locally is it's official. Comerica, I'm sorry, Fifth Third Banks is entering Arizona with multiple new branches officially now because that Fifth Third Bank has closed that $10.9 billion purchase of Comerica. We told you about this sale coming our way and how this is going to kind of change the banking landscape here when they announced this out there. So Fifth Third Bancorp is gaining dozens branches, 12 branches here in the Phoenix area. It's the ninth largest U.S. consumer bank now with this purchase as well by closing this deal. So that is officially closed now. So if you bank at Comerica, it's going to be changed here to Fifth Third Bank here coming up as well. So Fifth Third Bank is based out of Cincinnati. Wants to get more into the bigger regional markets like Arizona, for instance, coming up here. So they've now entered Arizona, California, and Texas for the first time with this deal. They already had a 1,130 branch footprint in the Midwest and the Southeast. So this merger adds a total of 352 total branches from Comerica to that Fifth Third network. They obviously want to keep expanding here into the Western United States as well. So that is officially done. Just something to keep in mind if you bank with Comerica or you start seeing Fifth Third banks popping up everywhere. You'll see at least 12 of them coming up. That is going to be why. Folks, I appreciate you joining us here for this Tuesday. I don't think what day it was. Tuesday morning show out there. I tell you what, let's throw the market watch up here. The market's open. Let's see if our tracking software is in fact updated at all as we end the show. I can tell you Dow Jones is actually up 253 points right now, 236 points right now. The Dow is up as the opening bell has rung. S&P 500 is down 1.40. So we've seen some flipping here from the futures market into the actual trading day, right? Dow was down earlier in the futures. S&P was up due to Palantir. They've kind of flipped here as the morning has started. NASDAQ is down 87 points right now as well here as trading has started. Russell 2K is up to 26 points as of right now. I'm sorry, 17 points as of right now as we just get the update as well. So Bitcoin's actually gone down some more to 77,695. So we've seen the Dow kind of change from the futures. We've seen the S&P go the opposite way as well. What will the trading day have? Gold and silver is still riding high, though. I can tell you that as the market has opened as well. So, hey, we'll be back tomorrow, Wednesday, 11 o'clock here at McCollum on Business. Come and join us. Catch us on demand. Share us with your friends. We'd greatly appreciate that. Coming up next here, Robat TV Live will be the main event, followed by all of our on-demand stuff out there, folks. Appreciate you joining us. Have a great Tuesday. We'll see you later, everyone.